Hi, I'm Dawn Litchfield Brown, and today I'm going to do a little interview with Marcus Bickle, our manager for the Van Winkle portfolio. Marcus, come and join us, please. Now, we have a little height difference here, so I'm hoping that you come out on the camera okay. 'Cause
Hello,
this is
everyone.
pretty candid. I wanted you to talk to us today about your philosophy for the Van Winkle portfolio. And maybe you could start with why we're calling it the Van Winkle portfolio.
Well, the Van Winkle is a really funny story about a guy who essentially falls asleep for many years. I think it's like 20.
A couple decades.
Yeah, a
Yep.
couple of decades, and he wakes up and everything has changed. The whole world, and it's kind of like a culture shock thing. The real story is a little funnier. He's kind of like this listless drunk, not a great guy. He goes off into the mountain to get away from his nagging wife, and when he comes down, everything's different.
So don't get any ideas.
No, we're not pushing that idea in the philosophy, but we are pushing that you should be able to put money into the market and just kind of forget about it.
Right. You should.
It's being managed. And then in 20 years or several decades, whenever that is, come back and have a nice pot of money.
Yeah, wake up wealthy.
Wake up wealthy.
I mean, that's what it's all about. And the difference, like when I first started, and I'll just tell you this story, I got into business, I was a file clerk, and people were buying this stock, and I went to the guy who was selling it, and I said, look, I have $3,000 from my income tax return. I was a single mom, and I said, it's all I have. Now, I won't be destitute if I lose it, but it is all I have. Should I buy this stock? Of course he said I should buy this stock.
Absolutely.
Turned out to be a little gold company out of Canada. And I went on vacation, and 2 weeks later I came back and it was worthless. Turned out to be a scam. Had that same person said to me, just buy $3,000 of XYZ mutual fund, right? I can't even begin to tell you how much that would be worth today, because I was 27 years old, 28 years old at the time.
Absolutely. Especially depending on what it was.
But the problem with that is, you don't participate in it. But
Sure.
the different thing about Van Winkle, right, is you're going to be buying some individual stocks.
Yeah.
And what kind of stocks?
Well, a lot of the market, as Don has said, has moved towards mutual funds and exchange traded funds because they're easy. You buy a portion of them, and that contains a basket of stocks that you normally maybe couldn't afford, and you just forget about it. Well, that's like Don said, it's effective, especially over a long period of time, but you don't get those individual home runs that you do from owning, like say a Tesla. Tesla at one point was $12. It's now, Elon Musk is the richest man in the world, which should tell you all you need to know.
Right.
Amazon was $2 at one point. Apple
Walmart was
$3.
$1.
Yeah, there you go.
$1 for Walmart.
So those are the kind of stocks and companies that we really look for with the Van Winkle portfolio. Things that might be overlooked because they are small and will take a long time to manifest. That if we are able to get in on the ground floor, can have huge returns. And,
right.
And you do see that. They've been called unicorns. Now there's this whole thing with the SPACs. The new ways to bring things to market. It's a really dynamic period for investment. And that's what we're trying to capture, especially for some of our smaller investors.
Well, and we want it to be fun. We don't want it to be Robin Hood fun, because that can be a little scary because you have no guidance at all. We want to be able to provide like a monthly webinar where you can come in and listen to Marcus talk about the different stocks, and maybe you have a couple of things you want to send in and research, because it helps. Sometimes we get ideas from other people.
Certainly.
Other than just our own research. And it should be fun. It should be engaging. I was talking about kind of our philosophy. I bought, what did I buy when it was 14? Amazon?
No, Tesla, I believe.
No, that was 12. But I sold that, made, doubled or tripled my money and sold it. There's where there lies a mistake. Pretty sure I bought Amazon when it was 14. Yeah, it was the book company, right? Yep. I bought it at 14, sorry. And I sold it at like 120 or something. Thought I made a killing.
Amazing profit.
Well, I only had like 100 or 200 shares. So you would think, well, how much is that stock going to go up? I need to find a better one. Had I taken on our philosophy, which is sell half, let the other half ride, once you make that kind of money, look where I would be. I mean, talk about experience, live and learn, right?
Absolutely.
It would have been so much better. Let me also share that I also had an oil company that went to zero. That will happen in this portfolio.
Yeah, I mean, I'll be quite candid. I don't have a crystal ball. Obviously, I still work for a living. So if I did, I probably wouldn't be. So I won't always be right. There will be, like Don said, some companies that might go out of business, and that is kind of the danger of making bets on these smaller corporations. Don also mentioned Robinhood, which I think is really important because it draws attention to something that's happening right now, which I kind of say is a renaissance among small investors.
Right.
You know, for the longest time, it was very, very difficult for anyone to invest in the market. You know, you had to have a broker, you had to open an account, so on and so forth. Now, there's an app for that, as we like to say.
Right.
And it's made it incredibly easy for just about anyone to invest in the market. Now, that has some real pitfalls. And, you know, a lot of people are both making money and losing money.
Big money.
They don't really understand what's happening. And that's where I kind of push the idea of having an expert or a professional to do this.
Just some guidance. Just some guidance.
I was speaking to a gentleman on the phone. He was helping me with my internet, and he mentioned kind of casually that he was in the stock market. So I mentioned that I'm an investment advisor, and we got to talking. So he had said that he was banned permanently from using Robinhood. So I was like, oh, well, that's really weird. Why would you be banned from using Robinhood?
Yeah.
And he's like, well, they were trying to get me to collateralize a stock I owned, and I didn't have the $40,000 cash, so they liquidated the stock and they banned my account. And I'm like, oh, you got margin called. And he's like, what's that?
Wow.
And
scary.
It's the long story short, that right there, the crux of it is why these things are kind of dangerous and why you want a professional. You don't try to fix your plumbing by yourself.
Right. So on our new website, this will be on our new website, we're going to have a place, hopefully, where you'll be able to open your account right online.
Absolutely.
So they won't have to go through all that mess. It's so much easier, and for us as well. And then what kind of minimums? Are we going to be able to start with like $500 if they're adding so much? Or how are you going to be able to do this for the guy or the gal that's just starting out?
Absolutely. So I like to see this as a long-term account, and I would like a minimum of $5,000 to start for this account, or a commitment of roughly $500, say a month, towards this, and that would allow even a small investor to really kind of participate in the market, to buy some of these small companies, as well as, you know, the ancillary investments around it.
Yeah, so that's the key. If you don't start with enough money, if he's buying individual stocks, you're going to miss them. So what he will do, if you start with smaller amounts of money, and I think he's going to work with anybody who can start with $500,
Absolutely.
He'll buy an exchange traded fund that has a basket of these innovative stocks in them until you get enough money in there. But it'll give you a chance to get your feet wet, see how it works, listen to Marcus online, and you can go from there. I want to share with you an example of two. We're going to pretend right now that Marcus and I are both 20 years old. He's definitely not 20 years old, and you know I'm not. But if we were both 20, and let's say I decided I'm not married, I don't have kids at the time, I'm going to save $2,000 a year for 8 years. Okay, that's all I'm going to say. And then I'm going to stop because now I have a family, I don't have the extra cash, whatever. And this is really important because that time before you get married and have children is when you have the most discretionary cash. So keep this in mind. Marcus, on the other hand, was playing for those 8 years. He didn't want to save anything. And then about the time I stopped, he says, oh man, I better get started.
I'm going to have to retire someday.
So now he's 29. At 29, he starts adding. Remember, I've stopped. He adds $2,000 a year every year until he's 65 years old. Now we're both 65. Who do you think has more money if it grew on average at 8%? Who do you think?
Well, the person who put the money in first.
You would think that would be true, and you're almost right. So I, who put in only $16,000 in total in my first 8 years, I'm going to have $396,211 by the time I'm 65. That's not bad, right?
That's not bad.
And that's not only 8%. We're not looking for home runs here.
Absolutely.
And you, who started at age 29, you put in a total of $72,000. You will have beat me by just about. You'll have $406,000 compared to my $396. So it takes you that long to catch up to me, this other smart 20-year-old. So if you're 20 out there, pay attention.
It's true, and you know, time is something you cannot beat in the market. Like, you can't get an extra year out of nowhere. So yeah, the person who started early is going to have more money.
And less risk.
Years.
The earlier you start, the less risk you have. And in fact, I will tell you have almost no risk. If you're doing it with a little bit of advice, you'll have almost no risk. If you can do the Van Winkle portfolio, that's put in a little money, close your eyes, wake up 2 decades later, wealthy. I'm Dawn Litchfield Brown. This is Marcus Bickle. We hope you'll join us.
Thank you.